Good morning, ladies and gentlemen. I would like to welcome you to our Group 1 presentation on finance and decision making. In the group, we had Fumbani Gondwe, Moyna Mungoni, and myself, Louisa Kwapata. In our presentation, we are going to talk about the financial analysis performance in our introduction, and then we are going to look into the overview of Airtel Malawi, which is the PLC that we have chosen to analyze as a group. And then after which we are going to do ratio analysis for Airtel Malawi, where we are going to look into profitability ratios, liquidity ratios, working capital ratios, as well as investment ratios. After which we are going to give recommendations to Airtel Malawi, which can be considered for future improvement on financial performance for the company. And lastly, we are going to have a conclusion to our presentation. So financial performance analysis is the process of establishing financial and operating firms' distinctive features from financial statements as well as accounting statements. So in this presentation, we are going to analyze the Airtel Malawi's financial performance using 4 ratios. And the ratios are profitability, liquidity, working capital, as well as investment ratios. So basically, these ratios are used to assess the company's performance on the market. Airtel Malawi is a subsidiary of International, which owns 80% of the total shares, and the rest of the shares are owned by the public. Airtel Malawi has got 11 billion shares, and it got listed on the Malawi Stock Exchange in February 2020. The biggest competitor for Airtel Malawi is Telecom Networks Malawi, but much as that is the case, Airtel has 54% of the shares on the market. So in trying to get the financial performance of Airtel, we have used 4 ratios in order to do our analysis. So basically, ratios provide for a basis of comparison between periods of times. Hence, in our analysis, we are analyzing the financial performance of Airtel for the period 2018 to 2020. And in particular, we are going to look into profitability ratios, which are ratios that indicates the profits which have been accumulated by a company from a business within a specified period of time. Secondly, we are going to look into liquidity ratios. So these liquidity ratios are ratios that measure the level of liquid resources that the business has. In this case, we'll measure the liquid resources which Airtel has. And these liquid resources are the ones which enable the business to meet its financial obligations. Further to that, we are also going to look into working capital ratios. So these working capital ratios are ratios which are used to understand the difference between a company's assets and its current liabilities. And lastly, we are going to look into investment ratios. Investment ratios looks at the perspective of shareholder assets, that is, if the business is having good returns and performance on its shares. I will now hand over to Fumbani Gondwe to look into a deeper analysis to start looking into the analysis of the ratios.
Thank you so much, Louisa, for giving us a general overview about what the financial performance is all about, as well as giving us the general overview of Airtel Malawi as our case study. So first, I will look at the profitability ratios, and the first ratio that I'm going to look at is the return on capital employed. So basically, this expresses the profit of an organization or a firm for an accounting period expressed as a percentage of the capital employed. And the formula for calculating the return on capital employed is operating profit over capital employed times 100, where the operating profit is actually the total revenue minus the total expenses, whereas the capital employed is the total assets minus the current liabilities. So from the graph, we can see that in 2018, the ROCE was 64.36, which rose to 100.99 in 2019 and dropped again to 77.94 in 2020. So The rise in the ROCE in 2019 can be attributed to COVID-19 pandemic, where we had the increase in demand for internet bundles due to visual connectivity while people were working from home. The other profitability ratio that I'm going to look at is the net asset turnover ratio. Basically, this provides an insight of how effectively a company uses its capital base. In other words, it looks at the effectiveness or efficiency of a firm in how it utilizes its total assets to generate revenue. And this is calculated by using the formula total sales over the capital employed. So for the period under review, from the graph, you can see that in 2018, the net asset turnover was 1.84, which increased to 3.14 in 2019, and finally dropped to 2.3 in 2020. Again, there was a rise in the net asset turnover in 2019, which is also attributed to the COVID-19 pandemic, which saw the increase in demand of data due to virtual connectivity. So the final profitability ratio that I'm going to talk about is the net profit ratio. So this basically measures how much net income or profit is generated as a percentage of revenue. So as we can see from the definition, net profit is the net profit divided by the total revenue, where the net profit is the total revenue minus the total expenses. So as you can see from the graph, in 2018, the net profit ratio was 33.59%, which dropped in 2019 to 31.27%. And in 2020, it rose again to 33.59%. So from the graph, it's clear to see that in 2019, the net profit ratio dropped. So a deeper analysis from the financial statements, specifically the income statement, shows that that drop is as a result of the increase in expenses, operating expenses to be specific. So having looked at the profitability ratios, I now move my focus to liquidity ratios. And the first ratio that I'm going to talk about is the gearing ratio. So the gearing ratio is basically the level of borrowing of a firm with regards to the equity that it has at hand. And if we say a firm has a high gearing ratio, it means the company has a high level of external borrowing compared to its equity. So if we look at the gearing ratio for the years 2018 to 2020, you see that the gearing ratio in 2018 was about 1,133.23%, which dropped to 92.15 in 2019 and rose again to 99.11%. So in 2018, we can see we have a higher gearing ratio just because the firm had more long-term borrowings amounting to 43.04 billion kwacha compared to its equity of 3.79 billion kwacha. On the other hand, for the other years, in this case 2019 and 2020, the relationship between the long-term borrowing and the equity is as follows. In 2019, the long-term borrowing was pegged at 14.5 billion kwacha against the equity of 15.75 billion kwacha. And in 2020, the long-term borrowing was pegged at 23.87 billion kwacha against the equity of 21.09 billion kwacha. So we can see for the year 2018, the gap between the total long-term borrowing and the total equity is very huge. That's why we have a higher gearing ratio. The other liquidity ratio that I'm also going to look at is the current ratio, which basically looks at the relationship between the current assets and the current liabilities. So this basically refers to the solvency of the company or business compared to its current assets and liabilities. So from the graph, you can clearly see that in 2018, the current ratio was 0.83. And in 2019, the current ratio dropped to 0.38. And in 2020, it went back up to 0.52. So as you can see from the graph, the current ratio is less than 1, which means that for the whole period under review from 2018 to 2020, the current liabilities of Airtel Malawi were more than the current assets, which implies that Airtel Malawi's ability to finance its current liability was relatively low. In other words, we can say that Airtel Malawi had a low debt paying capacity. Reaching this far, I would like to give the floor to my friend Moyna to continue on the working capital ratios.
All right, thank you very much, Fumbani and Louisa, for taking us through to this point. So I'll focus on capital ratios, first with account receivable days. So this ratio mainly indicates how quickly the company gets paid for its sales on the product that it offers on the market. And it is calculated by dividing trade receivables and turnover against the number of days in a year, which is 365. If you see the graph is going down. The days were higher in 2018, but in 2020, it has gone down to 64 days. So this is giving us an indication that in the year 2020, the collection of the company's debt was a bit slow as compared to 2019 and 2020. So that makes us to have a conclusion that Airtel Malawi is improving on its credit management. Next slide, please. So the other one we are focusing on is account payable days. This refers to the period it takes for the company to pay off its suppliers. So it's the formula is division of trade payables and purchases or cost of sales over compared to the number of days as well. So as you can see from the record, in 2018 we had it had recorded, I think, 264 days. In 2019 it rose to 307. And then it went further down to 235 days. So from this record, you can see that Airtel is taking longer to pay off its suppliers, although the trend is going up and down, but there's still no improvement. So this, in the long term, could lead to losing its variable suppliers because they would lose trust in Airtel company. And then the last financial ratio that we used is the investment ratio, focusing much on the earnings per share. So Braham and Houston in 2019, of course, agreeing with Chandra 2019, defined earnings per share as the company's profit divided by the number of shares on the market. So this we calculated by using the profit after tax over the number of shares available on the market. So earnings per share, we found that in 2019, it was 1.5, meaning 1 kwacha 45 tambala per each share. And then it later increased to 2 kwacha 1 tambala in 2020. So it shows that the shares on the market are increasing, which is giving more returns to the shareholders and of course, giving trust to investors. This can attract investors to come in. You may notice that we've used 2 years in this case because Airtel was listed on the stock exchange in 2020. So we only have analysis from 2020 going further. In 2019 and then going to 2020. So finally, having reached this far in the analysis, we've made several recommendations. First is to do with the profitability ratios. As much as we see that the ratios are increasing, but we found that there's still room for improvement. As you can see, an extract of the statement of the comprehensive income, there are some expenses that are fixed, and then there are these expenses that we find that they are flexible. The operating expenses, if Airtel could focus on reducing these expenses, the profitability ratios could go further high. Why are we calling these flexible? Because these include administrative costs and other costs, but then the licensing fee and spectrum usage, these you cannot run away, and Airtel cannot change them because these are bound by the regulator. And then further recommendations are to do with liquidity. We find that if Airtel can consider having more long-term financing for its operation, it could help them to reduce the level of current liabilities, because we noted in the analysis that it is failing to manage its current liabilities because the assets that it has are minimal. They are not matching the current liabilities that they have. If Airtel could also work on its working capital by negotiating favorable payment terms with the suppliers, we find that they could be able to accommodate longer term payments. And then this in the long term could improve its collection period by reducing the funds that are locked up in receivables through dealing more with cash transaction. So, ladies and gentlemen, this is the analysis that we've made for Airtel in the period between 2018 to 2020. And some of the recommendations that we are making in this report includes Airtel reducing its operating expenses, because we feel that if they reduce, they could increase further on their profit margins or profit ratio. And then further, we find that if Airtel improves its correction period by reducing the funds that are locked in the receivables through dealing more with cash transactions, they could manage their liquidity ratios. Thank you so much for paying attention. I now leave the floor to you, our audience, for questions. If there are any questions, please.
Hi, Moyna. I've got a question. With regards to the net profit ratio, what do the percentages mean for Airtel Malawi?
I will take that question. The percentages basically represent the amount of money that Airtel is making per 100 kwacha sales. For example, if you have in 2018, just for example, you have 33.1%, it means that Airtel Malawi is making 33 kwacha for every 100 kwacha sales. That's what that means. Thank you so much.
Thank you. I don't know if there is another question from the floor.
Yes.
Yeah, you can come in.
Okay, thank you so much for the presentation, very insightful. And I hope management of Airtel will get some insights from the presentation. My question is, how can Airtel now increase its customer base so that profitability is improved? Thank you.
All right, thank you. I think I can take up that one. So as a telecommunications company, for Airtel to increase its customer base, I think it can consider the creation of new marketing strategies, which are possibly better off than the ones of its competitor. And further to that, they can also consider new product innovations. So in the end, this will increase the sales and eventually improve Airtel Malawi's operating profits.
Thank you, Louisa. Is there any other question before we conclude?
Thanks for the presentation. I have a question. Why should a project manager take time to understand financial performance of a company?
All right, so I guess I have to conclude on that one. So it is really important for a project manager to understand performance of a company, whether the company that they're working with or the other companies that are stakeholders to their projects, because it will inform, the project manager will make decisions on an informed place where they understand the amount of resources they can pump in, because they are not just pumping resources when the company is not doing well. They will have to compromise and see at what level they can, to what extent they can invest in a specific project whilst maintaining the performance, the overall performance of the company. And that is why a project manager needs to be well informed in terms of the financial performance of the company. I don't know if there are any other questions this far. Nope. Thank you so much for being a good audience. I really appreciate your presence this time. And this marks the end of our presentation. Thank you.
Thank you.